As you can see, we've got the bears pretty much focused on the consumption side, and the bulls quite rather looking at the production side. Right, what I'm going to do, I'm going to ask a couple, 3 questions now, so hopefully you guys can see the true technical depth, so if you can get ready with some really tough questions, that would be great. Okay, so the first question, I'm going to give it to the bears to kick off with their first response. Copper, or Dr. Copper, has been the bellwether commodity for decades and is sought to indicate larger global macroeconomic trends. Do you believe copper has retained its status as the bellwether commodity?
Okay, I will answer that, and in fact a lot of those slides I guess were addressing precisely that issue. Yes, to some extent it can be said to be a bellwether commodity in that long term historically it has increased in volume at the same rate as IP has grown in percentage terms. It's a bellwether commodity in the fact that it's widely distributed through the economy. Although the focus is on electrical, that electrical is widely dispersed between infrastructure, construction and manufacturing. It's also well distributed between early, mid and late stage development. So to that extent, it does still retain some status as a bellwether product. The reason it perhaps isn't is for the reasons I have given before, in that it's coincidence that the pluses and minuses that relate to copper consumption actually equal out to IP. Longer term, we see a situation where new consumption is not really coming in where it did in the past. I mean, we have seen certainly during the last decade a massive increase in electrical and electronic applications, and this is everything from cars to building wire to power cable to electronic strip. All of these products. There has also been a huge increase in heat exchange functionality in air conditioners. We do not see many new markets for copper. On the one side, as I mentioned, we have wind power, we have solar power, and we have electric vehicles as well. We're very quickly seeing a situation where the substitution by aluminium, the thrifting of copper, is actually coming in as those markets are growing. Where in the past you could probably rely on a sunrise product being very high in copper use and then that declining over time, we're seeing the decline before the market even gets going. So that's one thing. Another thing that concerns us very greatly is the potential for core markets to lose out, especially to aluminium. That's the case certainly of air conditioners. It's even the case of building wire and power cable. Building wire, of course, is nearly 30% of copper consumption. That can turn over to aluminium. Regulations will stop it for the time being, but it will happen in time. So I would say longer term, no, it's not a bellwether commodity.
Robin, anything to answer that?
I would add that in the work that we have done at the back with our economists and quant guys, is that coming back to the macro level, which I think was what the question alluded to, we have found more of a correlation, say, with the China PMI, which makes sense, China being 40% of global consumption. There's a debate, I think, that's going on that's not entirely clear as to what leads. Does the China PMI, does the downturn or the upturn, i.e. the swings, does that lead the copper price or the copper price lead the PMI? Our initial work suggests it's the PMI leading swings in copper price. So from a macro level, I think Dr. Copper, with a bit of a Chinese bent, does prove itself.
Great stuff. So we're going to pass the ball over the fence to the bulls and the rebuttal. Anything to add?
Yeah, I think actually once again I'm quite similar to Robin. I think longer term, if you look historically, there was a correlation between copper and sort of the macro economy. But I think what you've seen more recently, and I caution just looking at recent events, but sort of from January last year, you really saw this disconnect open up between, say, the S&P 500 and the copper price. So I think, from where we are today, when we're thinking about that developing markets are probably going to perform better than, say, emerging markets at this point in time, and I think that copper as an indicator of the macro economy maybe isn't the best metric to be using, but I still think there is a meaningful correlation between, if you look at the Hong Kong index, if you want to look at China PMI, any kind of China macro data and the copper price, or actually in fact Chinese steel prices, there definitely is a correlation there. But I think just using it as an overall bellwether for the economy, I just think now was, if we step back when the US was industrialising, sure, copper would have been a meaningful driver, but today I think it's not as relevant.
Yeah, I was just picking up on that last point. I guess in the, we put this in the survey. I mean, the point is, in terms of the intensity of use, and we measure that in tons of consumption per million US dollars of GDP. And you are starting to see a bit of a flatlining in China. It is moving sideways, but it is still 6 times that of the US. And obviously those mature economies have peaked and started to trend lower. I still think that is going to be a useful measure, but as we've heard in the building, the electrical side, you've had like 12% growth per annum over the last 5 years. Is that going to be maintained over the next 4? Probably not, but it's, I would think high single digits is still going to be a serious number in terms of where the country's going in construction, even though there's obviously a bit of overhang, and the electrification of the country. As people continue to migrate out of the bush, as I would call it, but I haven't been doing, I'm more of Africa. The bush to the city.
Developing. Fantastic. Thank you very much. Right, a bit of a follow-on question, really. Let's give the first answer to the bulls this time. Exposure to copper is greatly sought after. Which do you think is the best way to gain exposure to the underlying metal? Futures, exchange-traded products, equities, or a mixture of products? And why do you think this? And as an additional sort of question, how do you finance projects, copper projects? We know the supply side is looking tenuous. How do you finance copper projects?
Well, as an equity fund manager, I obviously think the equities is naturally the best way to get exposure to copper. But actually, I did some work on this recently, and I just sort of took, a basket of kind of the major copper producers globally, and over the last 5 years and over the last 10 years, with bar a couple, equities has been the best way to gain exposure to the copper price. And I think the reason really why that happens is obviously by owning the equities versus just owning an ETF on copper or a future on copper, you get the leverage to growth, you get the leverage through costs, and then also you get an additional return, so you're obviously receiving dividends along the way. None of these you get by owning just the physical. That would be naturally the way that I would look to invest. And I think over time, I do believe that there is going to become a scarcity premium implied into copper equities over time. So once again, I just think it's going to be more natural to go down the equity route. How do you finance copper projects today? I think there's 2 ends of the spectrum. I think if you've got a really good copper project, you will have no problems getting financing. Traditional project financing is open to a good quality copper project, and actually what often happens is that good quality copper projects are held with the majors, and the majors are able to still finance a lot of these. Smaller end copper projects is naturally more challenging. Financing on the junior end and actually really the mid to junior end is quite tough. I think just going down, trying to get traditional project financing from the banks isn't really, at this point, I think is going to be possible. There's a lot of sort of other creative financing mechanisms that you can use. The high yield debt markets open up to a lot of mining investors. More creative things around royalties, convertibles, just a whole lot of different things. I think also JVing and bringing in additional partners, be it China, be it the Japanese, all of these people that want copper longer term is, I think, the way that people are going to look to diversify their financing. And people have mentioned this before, but bringing on new copper supply is incredibly capital intensive. So it is natural to want to try and diversify away some of that capital risk exposure. So I think bringing in partners is a very sensible thing to do.
Yeah, I guess I actually did the exercise as well. You create a basket of pure copper plays, and you obviously just index it to the underlying copper price. And I didn't include dividends, but I mean the actual returns were pretty similar: 1 year, 2 year, 3 year, 5 year. So I guess there's obviously going to be disconnects when the equities, and 3 times, in fact there was 4 disconnects on this 5-year period, and 3 times out of 4 they outperformed the equities. And almost every time they got it wrong, because the copper price actually didn't deliver. After, for example, the 2012 Q4 expectation of restock in China, equities outperformed by about 20%, and expectations were dashed, of course, as the demand response was so poor. Copper price sunk and the equities undershot on the downside. So I think at the moment, on that index, they actually look pretty cheap. So I don't know whether the equity market has just become a bit more wary, having been bitten 3 times. So I would argue at this point, the copper equities look good value, and the ones that are going to outperform are those ones which are more advanced in terms of delivering new production, because the market is so focused on free cash flow generation. Those that are in early stages, there's going to be delays, there's going to be government blocks, there's going to be environmental issues, and there's going to be capex inflation, and those are going to underperform.
Right, over to you, James.
I represent an LME ring dealing company, therefore totally unbiased view would be derivatives. So futures and options on the LME. You can go long, you can go short. Not so easy with other instruments. And I think the evidence that we see in terms of increased turnover on the exchange, more members wanting to join, maybe not floor members, but category 2 members, increased focus by our Asian users, with now the LME owned by Hong Kong exchanges. I think you've got a lot more, if not better, leverage using futures and options. So that would be my recommendation. In terms of financing, we are a project finance bank, so anybody out there with some good copper projects, come and see us. Very happy to talk. For some of the smaller, medium-sized projects, I think the trend that we've seen is offtake agreements. So the traders, the Glencores, the Trappies have done deals where they've provided equity, or private equity has gone in and they've looked for offtake type agreements. So I think that's quite a sort of topical theme, particularly as banks, not SocGen, but banks in general are pulling away from commodities. Some very high profile departures in the last week or so. But those banks that are committed to commodities, project financing, have a history of doing it, which we do, then I think there's the appetite.
Okay. Well, I don't, as an analyst, independent analyst, I don't come from either side of the equation. So let's, as far as I'm concerned, let's, because we have very good arguments on both sides, let's stick with a mixture being the best possible approach. One thing that does concern me a little bit about the equity side of the picture is that we've very eloquently, I think, said just how copper projects are becoming more and more and more expensive. That isn't necessarily going to be fully reflected in the price of the underlying metal. So we could see that the development of copper projects perhaps being a better business for equipment suppliers than the mining companies themselves. But that's a fairly long-term consideration. Short-term, a mixture for the reason that both are given, I think.
Thank you, Paul. Right, okay, this will be the last question for me, really, and we'll pass on to the audience if that's your sparking questions. Right. The exchange traded product holdings have increased dramatically over the last 10 years, as have weightings of copper exposure in many mining oriented investment funds. What effect has investment demand had on copper prices, if any, with particular reference to commodity-backed financing in China? I'm going to pass that to Bears to answer first.
I think I would be lying if I said it hadn't had any impact. Clearly, it's had an impact. We can go back to the start of the boom in commodity prices, copper, for example, in the early 2000s. The tendency of index buying, long-only type investments, clearly, I think, helped to pump up the copper price, for want of a better word. So it's undeniable. I think the evidence is there's been a lot of academic work that's gone into this. But, if it amounts to speculation, stroke investment, that's good for the market because you're introducing liquidity into the marketplace. I think that's good. So I've never come from the viewpoint that it's bad, that we need to over-regulate, which is maybe what we're seeing now, that the regulators here in Europe and to some extent in the US, have gone from one extreme of perhaps under-regulating to now wanting to over-regulate. So I think there's dangers there, but I see no sort of fundamental reason why we shouldn't have investment demand in our markets. I think it makes for more efficient and better markets.
Mm-hmm. Well, having been in the business of price forecasting one way or another for really quite a long time, I think this experience has shown that the market changed. It changed actually quite dramatically during the course of the early 2000s, specifically in copper, I think from 2004 onwards. And that was a time when you could see that you could model prices based on fairly simple economic indicators: supply-demand, exchange stocks, rate of consumption growth, etc. And you could put those numbers in and come up with something which wasn't so very different from the copper price that actually turned around. Then things changed, and there were specific things going on in the market itself. I mean, we were going through a period of very rapid growth from a position of very low stocks, but even so, prices surprised very, very much on the upside. We saw this huge increase in price, which and the only explanation seemed to be that there was this additional investment demand coming in as the large long-only funds came into the picture. It could well be the case that the fact that they're there, there is a plus and a minus effect going on, but we're not going to see that huge impact again because there was a particular thing happening at that time. The funds were coming into the market, so you had that growth. Now we're looking at changes year to year, up and down a bit, and that means that you haven't necessarily got the same scale of impact on the copper price.
Great stuff, thank you. Now over to the Paul side.
Bulls, I'll kick off. I guess the ETF, the physical backed ETF, has been a bit of a disappointment. Pretty much flat at the end of 2013, about 3,000 tons, and obviously I think it's about 4 or 5 times the cost of holding physical backed gold or silver ETF. So there's obviously a reason for that. You know, and the rest of it, to me, you know, at the end of the day, copper's used up. It's stuck in buildings, fridges, car radiators, plugs. I don't want to waste the rest of the time naming every electrical instrument I know. But it's used up, it's off market. The rest of it is just movement of stocks. I mean, we saw the big, you know, the news breaking, SRB, you know, buys 200,000 tons of stocks. Well, it just moved away from the bonded warehouse, which had been built up and rolled off in terms of the finance. So the banks own them, they shifted over to the SRB. So I think, you know, stock movements aside, you know, at the end of the day, if you've got a commodity which is used up and not sitting in central banks, don't want to mention gold, but, you know, that's what it's doing. It's not doing much, is it? You've got a market which you can understand and is going to always, you know, find price discovery. And there's going to be a bit of tightness. We've seen the spot China premiums, you know, move back to about $130 a ton on this news. A bit of tightness, obviously. It's a seasonal issue as well, with demand picking up. But I think overall, it's not a bigger cloud as it is in, you know, gold or silver markets, where it's been a much important part of the price discovery.
So I'd say that exchange-traded products have definitely impacted the copper market. I would agree, not to the same extent as gold, but simply if you look sort of historically, if you wanted to get exposure to the copper price, most investors would go and buy a copper equity. Obviously what exchange-traded products did is they provided another avenue to get relatively cheap liquid exposure to copper. So that naturally cannibalised away some of the demand that you would have had for the copper equities. I think also what these products have done have increased volatility into the market. Now some people think that's a good thing or a bad thing, but you know, I think in the past what we would have been able to do is look quite simply between, you know, supply, demand, look at the marginal cost of production. We've sort of seen the copper price trading somewhere around about that price on the cost curve. What we've seen though is that the copper price has consistently traded above its marginal cost of production, which many people put that down to. There's a component of the copper price which is tied up in sort of some sort of financing deal. So that's maybe a little bit separate to exchange-traded products. But I think financing on the overall impact of the copper market has been significant. And I think one of the risks that we have as we move into this year is the impact of some of these unwindings of these sort of copper-backed financing deals. So it's estimated there's about 1 million tonnes of copper tied up in these financing deals. And as the RMB's weakened, as the banks are trying to crack down on any of this sort of off-balance sheet or, you know, shadow banking, financing kind of relationships, you know, I think that is going to see potentially more copper come back into the market, obviously putting downward pressure on the price. And so that's, you know, straying a little bit away from the exchange-traded product. I just think that the overall new ways that you can get exposure to the copper has had a negative impact on the overall market.
Great. Well, thank you very much. Right, now it's over to the audience to ask the questions. We've got one beautiful assistant and one very not beautiful assistant. Sorry, Tommy. August.
Thank you, Matt. That's a lovely beer. My question's to Olivia. You are a copper bull, and you believe the best way of getting exposure is through equities. Now, how do you put your money where your mouth is? And you know, so what copper mining companies are you investing in, and why?
So I think if we look at like where the majority of our money is put to work in the copper spectrum, I think at this point in the cycle, it's really important still to have the lowest cost producers. So I think, you know, particularly when you have potentially a copper price that could have a big tail end to it, if you're sitting at the bottom of the cost curve, you're going to enjoy some fairly attractive margins. I also think that it's important to hopefully have a company that can deliver growth into that sort of 2016, 2017 timeframe when the copper market is hopefully going to be getting tighter. So into that, in that context, I think probably the two globally best copper companies that you can invest in at the moment would be Freeport. Freeport, you know, has a world-class copper business. It's obviously been impacted with the the bans that are going on in Indonesia at the moment, and it's also, I think, being tarnished by investors with their oil and gas exploration acquisition last year. But even so, like the valuation multiple that this stock trades on at the moment, it just trades at well below sort of the average multiples for the sector and has a really attractive growth profile. I think if you want a bit more sex and violence, First Quantum is definitely the sort of stock you want to be owning. I think at the moment it's fair to say they have their hands full. They're trying to bring on a number of growth projects in Zambia, plus they've gone out and acquired Cobra Panama. So they are wrestling, and also they've got a balance sheet somewhat to deal with as well. But I think that to me on the larger cap side is certainly the best way to look at investing in copper. What we have been doing in the portfolio though is trying to look for the next sort of meaningful copper producer. So we have been increasingly going down that kind of mid-cap into the junior spectrum. And we've started to build some positions in that space as well. We like to keep those on space projects.
Great stuff. I mean, if I can just stay in the same format and have a bit of debate on the panel, we've got the buy side to the bears. I mean, are we going to be shorting some copper producers?
Definitely. Long equity, short commodity. So again, that's the flexibility you had with futures and options. You can buy a put or you can sell the future. And with the curve backwardated, buying the future is going to be at a discount. So yeah, that's the way forward. If you want to sleep at night and hedge your bets, then long equity, short commodity.
Anything else from the rest of the panel?
No, just making out of that trade.
Sir.
Good day. My name is Christopher. I'm a reporter with SNL Financial here. My question was actually to Paul.
Thank you, Chris.
I'm as a journalist, I'm not taking side for or against, but one thing that you did say with regards to consumption of copper and what your outlook is in terms of copper consumption made me wonder. You say that you believe that copper consumption is going to be lower. You had spoken about the replacement of copper wire with aluminium, excuse me. What I'm interested in knowing though is, that there are places in the world where the economies are still very much developing. We can say that China has kind of slowed off, but it is still developing. There's still a need, a want for white good products. I think as well, it's also worth mentioning that China is actually starting to get very concerned right now about its environmental issues, and it makes me think that they are going to start also, as you had also mentioned, not with regards to China, but start looking at alternatives to fossil fuels for transport, such as hybrid automobiles, possible requirements for consumption for only operating on batteries in urban areas, and so forth. We see a proliferation of electrical bicycles. And if we speak about Africa, there are some economies in Africa that are definitely growing. People have told me in the past, things slowly but surely, with regards to Africa. We are going to start seeing a want, a desire for white goods, for automobiles, and maybe Africa can be one example of where all of us, the world, gets it right. Work more towards more environmentally friendly transport, such as hybrid automobiles or battery-operated automobiles. One other thing, I think you're going to start seeing a proliferation of a lot of these smartphones. To be honest with you, I don't know how much copper they contain or not. But I would tend to believe as well that they are also going to.
Actually, I bet Paul knows.
I can't give you a number, but it's not. Yeah, but you multiply it many times over, and of course it is significant, and it's one of those markets that we see this electrical and electronic strip going into.
Yeah.
With the China issue, and I think that's the really big one. I mean, China accounts for about 40% of copper consumption, and it accounts for most of the volatility. And I think something that people don't necessarily realise in the decade 2000 to 2010, Chinese growth in copper consumption exceeded that in the rest of the world. So the net rest of the world declined during the last decade. Now it's shifting a little bit this year, this decade. But we have seen that phenomenal growth in China. And we have got to a point where the intensity of use of copper in China, considering its economic state, is incredibly high.
Yeah.
Now, a lot of that, of course, is because of very hefty use in infrastructure. Also, they have an amazingly strong property sector at the moment, with a big risk of that not remaining the case. And of course, they have grown as a world supplier of many white goods, not only the domestic market. So they're in a very strong position at the moment. To ask for huge additional consumption is rather a lot. I'm not saying, I don't think you could say that China is not going to do well and it's not going to grow, but it's not going to grow by as much.
No.
And I think a couple of markets we have to look at as being particularly vulnerable. And if you look at, for instance, the market for utility power cable, China is just about the only major country which uses copper in that market. Most of that market has shifted over to aluminium. Copper, China hasn't, as it stands. Another market which is at risk is air conditioner tube. Again, a huge market in China. That market is shifting over to aluminium. And you can go on with that list. The building wire and industrial cable aluminium product, which is now being marketed actively and succeeding quite well in the United States, is also being marketed in China with some success. Now, the suppliers of that product, as it stands at the moment, are quite happy to sell at a reasonably high price and achieve margin, not volume. That will change. So there's real risk in some of those existing markets. Of course there will be new ones. Of course there will be increase as far as electric vehicles are concerned, and there will be significant amounts of copper in there. Perhaps not as much as people expect, but there will be some. There will be some increase in China and elsewhere in, for instance, motors, where energy efficiency regulations are coming in, and that tends to be more copper. So it's not all negative, but there's a lot more negative to say than there is positive.
And might be a good question, but what's your outlook then with regards to copper consumption on the African continent? Because you do have, I can see in your face what you might be thinking, but it is starting to grow, and you do have economies that are becoming economies of size. I think of Ghana, I think of Cameroon, I think of Mozambique. I'd like to say Nigeria, but I'm not sure that.
Yeah, we will quite plainly see some acceleration of growth in Africa, also in some other emerging markets, and we're looking at net growth this decade in the world outside China. And yeah, there are particular targets where you might see some quite substantial growth. I mean, India is one, Brazil, Turkey. Then you can list the countries which are going to grow quite significantly, but the amount, the volume we're talking about, because the economies are so much smaller, has to be so much smaller, much smaller than it was in China. It's partly a volume effect, and partly the fact that we were lucky that China was quite so copper friendly.
So you don't think that one further question. You don't think that the emerging markets will offset the decline that we are expecting to see in China?
Yeah. There will be some offset, but not a great deal.
Thank you.
Okay, so we'll flip it over to the other side and probably ask about, staying on Africa. So we have a look at the African potential for production and consumption.
I'm not the right person to comment on African consumption. That's not really my area of expertise. But I think increasingly, as we're looking for new sources of supply, Africa is home to some of the world's richest copper deposits. I spent, for my sins, 10 days out of the DRC last year, standing next to green rocks. I've never stood next to a green copper rock before anywhere I've been. So there is some incredibly attractive longer-term copper options in Africa. But they are hampered by a number of challenges. So, the key challenge that you have in both Zambia and DRC is power. That there is ways that we can begin to solve that, and it's probably going to come through on the hydro side, but it takes money and it takes time. Obviously, there's huge also infrastructure bottlenecks in the DRC. You have a very old rickety railway that actually doesn't completely connect both sides of the continent, and that's a project that's been ongoing for a number of years now to basically refurbish that. So whilst there is some really interesting copper projects, Robert Friedland will tell you how great his Kamoa project is. Glencore's got a really good copper business now in Katanga. But if you look at some of the undeveloped projects, the power requirements are just huge. And at this point in time, it's very hard to see how that is going to play out if you look out, say, the next 5 years or so.
Yeah, I mean, they've generally been higher cost. I mean, Africa is one of the higher cost copper producers, so, they do need scale, and power is obviously going to be an issue with regards to getting those costs down. But we've seen, DRC is double, triple volumes, displaced Zambia as #1 producer last year, and with more growth this year with Glencore Xstrata, the expansion, what's going on there. So, yeah, it's a good story, but I think globally, of the, 80% of world production, 60 is from copper porphyries and 20 is from sedimentary hosted, and that is obviously sedimentary hosted deposit, Zambia and DRC. So, the future, I'm talking about 100 years, is probably outside of Africa, but that won't be your problem.
I just want to thank you very much for the lodge my disappointment of Paul not knowing how much copper goes into the iPhone.
Yeah,
That was the challenge.
I mean, I don't know that actually contains copper.
I'm pretty sure
It does.
Okay, next question, the audience, please.
Thank you. Last year we saw a few smelters in China stop operating because of a shortage of scrap. I just wanted to know from the panel if anyone's seen that issue resolved, if scrap is available now, or if it's going to be a sustained problem for the future.
It's not a sustained problem as such. There is scrap, and there is more and more scrap coming on. And in fact, if you look at a scenario that I'm proposing, which is that there will be a slowing in consumption, then by its very nature, the proportion of scrap in relation to new metal should increase, because that's relating to a period of faster growth. The extent to which that actually gets used at various points in the chain, of course, depends on the specific economics at the smelter, at the refinery, and at the direct melt stage. Generally speaking, the route through scrap is an economic one, but it's only an economic one if it's worthwhile selling that scrap, especially the scrap that's more difficult to end-of-life scrap, which is more difficult to generate. There's a time lag, and that scrap will come out in bucket loads when the price is right. It won't come out when the price is wrong. So it's a volatile element of the market. And the beauty of it is, as far as copper is concerned, of course, is that when the price is low, there's less scrap used. When the price is high, there's more used. So it's a buffer effect. It dampens a good market, and it saves a bad market.
Robin, anything to
Not really. I mean, I would just add that my impression of the scrap market is it's getting better. I think there's better availability over time. It's not there yet. The fact that we've got a backwardation in the copper market, I think, alludes to the fact that we've got shortages of scrap, as well as some of the delays in concentrate shipments, whether it's Chile, Indonesia, whatever. But I get a sense it's improving. The Chinese fabricators, smelters that we talked to, I don't think are as panicked as perhaps they were 12 months ago. So, and I think where the economy is at now, China arguably started booming in the early 2000s, and what I've read suggests that it takes about 10 years to get that reservoir built up so that you've then got the domestic generated scrap. So 2013, 14 is probably, in terms of timing, I think you're going to see that situation probably improving, taking into account what Paul said as well.
Great, so if I can put a bit of spin on that ball and deliver it to the bulls. Sticking with the smelting theme, we know that copper concentrate grades on average are dropping off as a function of lower copper deposit grades in general. How big an issue is it going to be if you've got lower grade concentrate and a concentrate that's got more deleterious elements?
Yeah, I think we saw that this year, some of the backlog in terms of what was translating from mine production into refined production, and yeah, there were certainly delays, but it's just a question of blending those arsenic-richer ores with better material. So there's obviously delays to get that through the system, but it will happen. And there's 1 million tons of smelting capacity coming online, or started late last year, and will continue to ramp up this year in China on the refining side. And I think there's a couple of 100,000 tons in terms of the secondary process as well. So I think that will be handled. But generally on scrap, it comes back to my point. Copper, at least it's something useful that's used up, and it's not so easy to rip out power cables, transformers, and the guts of the building you just put up. So I think the 10-year cycle seems a bit short to me, unless buildings go up and down in 10 years. I live in a Victorian house, which is, actually, the lead pipes. So if I do start to ramble, let me know. 100 years old, still got the copper. 10 years? Where did you get that number from?
I think, to counter your argument, you're taking the very much Western world experience, go to China, and they can do it a lot more quickly. So I think that Chinese experience that we see in all industries will just make it happen a lot more quickly.
So they're not putting buildings up and ripping them down every 10 years, or are they?
No, it's probably shorter than that.
Investment shells.
It's shorter than that.
Yeah.
And don't forget that about half of copper is going into manufactured products, white goods, etc. They've got a much shorter lifestyle and life cycle than the building.
A lot of them end up in Africa, though. Coming back to the point, there's growth in white goods there. Cars, so what if they're
I don't know how much there is. I'm not in a position to quantify how much growth there is in white goods. However, I will say that I know that there is growth in African economies.
Definitely. Yeah.
Anything to add on that?
I'll just put some maybe more controversial things out there. I think, I think as we're going to have lower grade, higher impurity copper concentrate, and obviously that's, I think as we look through towards the smelters, we've been through this period where, TCRCs have been at record lows because basically we've had X number of smelters built over numerous number of days in China in the last couple of years, just because financing has been so incredibly cheap. I think that is actually now starting to be reined back in, and I would actually suggest, after having such low TCRCs, maybe when moving into an environment you could actually start to see some TCRCs increase going forward, which I don't think really many people on the street do think about. And I do think actually with the scrap market's been quite an interesting dynamic over the last couple of years, because what we've seen is that any time the copper price drops below $3 a pound, roughly, the scrap market really does start to dry up quite quickly. And as been mentioned, that does act as a bit of a buffer or a floor to the copper price. It won't stop the copper price falling like maybe costs can do to a certain extent, but it is definitely an active dynamic within the copper market, which I think actually often gets forgotten about. And as we move forward, and we need to think about an environment where it's not just copper that's being heavily recycled. Let's start to think what happens when steel begins to get recycled in China. That's a really quite a scary kind of scenario. But recycling of commodities going forward is going to be a really interesting dynamic that I think we're going to need to think about over the next decade.
So, I mean, taking that point forward to the best, I mean, you must be expecting TCRCs of what, 200?
Not quite, but we have actually a fairly substantial increase in TCRCs in our forecast, and exactly right. The issue, and as far as some of the big mining companies are concerned, they're looking very closely at which scrap is going to come back and at what rate from China. It's a huge issue.
Well, I mean, you guys have been very polite. Let's put some teeth and ask some really good questions. So the one gentleman at the back, so I'm expecting a good one from you.
Yeah, hi, Dan Smith from Dan Smith Commodities Research. So, quite a few comments there about low copper prices, but I guess the question is, you know, when we think about copper over the last 10, 20 years, you know, low copper price going back a while was more like 1,000, whereas I guess you guys are thinking that perhaps the low price is 6,000. So there's been a big shift in the copper market in terms of perception. So I just want to quantify how you guys, you know, what you guys think is a low copper price in today's market.
Paul Swift?
Yeah. So I think that there's often a mistake that you can make when you look back in the last decade and say $1,000 a tonne copper prices or $30 a tonne iron ore prices. Is that over the last decade there's been some really significant changes in commodity markets, the biggest one being that China used to consume 10% of commodities, suddenly started consuming half of the world's commodities. And we've seen substantial real cost inflation. Okay, so the whole cost base of producing copper, for example, has materially changed. And apart from the fact when we had the copper price go well above its marginal cost of production, I would suggest that at today's price relative to the marginal cost of production, so $3 a pound is the price, marginal cost of production is $2.50, your margin today probably isn't all that different maybe from what the margin was a decade ago. Yes, it's a little bit higher, but it's not substantially higher than what it was in the past. So if I was to think about what would be a bear case copper price, you know, I do have some faith in cost curves over time, you know, but I would suggest that, you know, if we start to see a copper price at below $2.50 a pound, that would see the industry respond. It would see supply taken out of the market, and it may take, you know, 3 months, 6 months, but I do think you would start to see an equilibrium form again, and the copper price better supported.
Robin, any views on?
I would anticipate a pretty good floor around the 6,000 level. In terms of the trading range, if the market does get into quite a bearish mode, if the China story continues to surprise on the downside, we get some unwinding of the financing deals. Apparently there's going to be a further clampdown by the China banking regulator to be announced after the May holidays, so early next week. So that's going to cut the appetite for new financing. I don't think there's any threat from the current financing trades because a lot of those are hedged. And banks, and we do some of that trade, we require counterparties to be fully hedged. Now that's different to iron ore, where it seems the threat is a lot more because you don't tend to hedge the iron ore. You haven't got liquid forward markets as you do have for exchange traded commodities, or certainly not well developed. So that's where the threat is. Given a floor of 6,000, markets tend to overshoot, undershoot. So perhaps, you know, below 5,000 in terms of an actual low, you know, sometime between now and 2016 wouldn't surprise me.
Great stuff. So next question from the spin bowler, Mr. Williams.
Do you want me to use the microphone or shall I shout?
You might as well shout.
Okay. This morning I read in the newspaper that the greatest threat to humanity It's not global warming nonsense or nuclear war over Ukraine or whatever, but the emergence of a bacteria that is resistant to our current antibiotics. And we're not developing antibiotics at anything like the level that we need to ward this off. Now, my understanding, and I'm not a pathologist, is that copper is one of those elements which bacteria cannot survive on the surface of. Can you possibly see this as a pale grey swan? There might suddenly be a panic. Oh my God, we've got to get rid of all those stainless steel handles and replace them with nice brass ones.
Fantastic. Well done, Paul. Well volunteered.
Yeah, the International Copper Association is very, very aware of this actually, and one of their campaigns has been into antimicrobial copper for a long time. And to make it really work and get that feature to really work for you, you have to alloy it, you have to produce it in a certain way. And they have had some limited success. Now there's a potential for much greater success if they seriously manage to bring it into the insurance framework. For instance, there is an idea out there that this antimicrobial copper should go into places where there are lots of people, especially ill people. So you should have antimicrobial copper in hospitals, you should have it in schools, whatever. The conclusion I've come to is that yes, there is a potential, but that potential is unlikely to be realised unless it becomes a real insurance issue. For instance, if you don't have that antimicrobial facility within your hospital and people have to stay in hospital for a long time, that they will not be insured, the health authority has to pay. And I can see it coming in that way, but there doesn't seem to be any real success or push in that market. Could change.
Yeah, I rather like the London Underground stations where they still have brass handrails rather than the stainless steel ones. I mean, if London Underground decided to go for brass instead of stainless steel, that would be a huge demand.
No, this is true. But actually, getting back to the brass, of course, the brass is actually seen as a huge health threat. Leaded brass is seen as a health threat. And in the US, we're not seeing it anywhere near any plumbing because of regulation. That kind of regulation is likely to come in Europe, because lead is a no-no. Now, copper does have a solution. The fabricators have a thing called eco brass, which has actually got more copper in it, but it's expensive and nobody wants it.
Brass doesn't have lead in it.
Yes, it does.
Really?
Yes, it does. No, it has zinc, but it has 2 or 3% lead. And that allows it to be.
Anything on that from the board side? On brass and lead?